I'm Tyler London, Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities, here with your Cabot Weekly Review. It is Friday, October 10th, just about 9 a.m. Eastern Time, and we're heading into a long holiday weekend for some. We here at Cabot and the stock market are all going to be open on Monday, so just a 2-day weekend for us. So this week, as you can see, we have the chart of the S&P 500 here. Pretty decent week, really, by all accounts. Another all-time high for the S&P 500 and the NASDAQ. They were down yesterday, but all-time highs on Wednesday. The Russell hit well, here's the NASDAQ. The Russell 2000 hit another all-time high on, let's see what that was. That's Monday. Down a little bit over the last couple of days, and then the S&P 600 small cap index was a little bit weaker than the Russell. We have the yield here, the 10-year yield, as you can see, about where we left off last week. No major developments there. Gold pulled back a little bit yesterday, but decent performance in gold and gold stocks. That trend has been continuing. The big picture themes this week, there's been some questions about the sustainability of the AI-driven bull market. More scrutiny now being given around how well the hyperscalers are going to be able to monetize their CapEx boom and what the return on investment will be there. There's more downside risks, of course, due to the prolonged government shutdown. We're in the second week. And then on the consumer front, more evidence that there's really two economies. There's the haves and the have-nots, and we won't really get a ton more insight into that until the retailers begin to report. That's going to be later in the third quarter earnings season, so probably not a ton of clarity there, at least next week. Now, heading into the third quarter earnings season, I just pulled numbers last night in terms of what to expect from earnings growth for different market cap categories. So S&P 500, we're looking for about 10% earnings growth this year. 13.5% next year. Pretty solid expectations there. The mid-cap S&P 400 index, only 1.2% EPS growth this year, but that should accelerate to 17% in 2026, which of course is what most investors are going to care about. And then for the small cap companies, the S&P 600, finally returning to earnings growth, at least expectations. EPS should be up about 11% this year, and then about 18.5% in 2026. And of course, those 2026 numbers are going to move around quite a bit, likely based on what happens in the upcoming third quarter. In terms of reports, next week we're going to get into financial reporting. Pretty good macro gauge there. The growth rate in commercial bank loans has been picking up. Yardeni Research said it was up 4.7% through the September 24 week. Yardeni said that's twice as fast as at the beginning of this year. So for them, it confirms that the pace of economic activity is definitely not slowing, but it might actually be accelerating. And I saw more notes this week, kind of bullish notes on big banks, even though the financial sector hasn't really been performing. But in the backdrop, we have accelerating M&A activity, IPO activities picking up, solid stock price performance, more stock issuances. These are all good things for investment bankers. And then also, like I said, I was reading up on Ed Yardeni's research. He was talking this week about easing monetary conditions and the Trump administration's policies aimed at deregulating the financial sector that could lift the prices of regional banks that might be acquired. We already saw an acquisition this week with Fifth Third Bancorp acquiring Comerica. So anyway, something to keep an eye on there in the financial space, and I'll have a couple of mid-cap financial stocks to talk about in a few minutes. On the macro front, kind of a dearth of economic data this week. Of course, the government is shut down, so we're not getting a ton of news. A major date arrives next Wednesday when some defense and military paychecks will not go out, including for some active duty troops. So that's a pretty significant date on the calendar to keep an eye on. We also are missing weekly jobless claims for the second consecutive week. However, I saw a report from Bloomberg out early this morning that the BLS employees, the Bureau of Labor Statistics employees, have been called back to work to get out those September CPI numbers to have ready by the end of October. So hopefully we can get some more data releases there. I know the Fed, of course, is going to be relying on that. And then We have airport disruptions, which is probably causing some concern for people, not only, of course, those that are traveling right now, but people that are looking forward to the Thanksgiving holiday and trying to figure out if they're going to travel or not. All right, last big picture thing, we have the Fed. Of course, the FOMC minutes came out on Wednesday afternoon. Big picture there, Fed members continue to struggle with the downside risks to employment versus the upside risks to inflation. But really on balance, the notes showed willingness to cut further this year. As of yesterday's close, that pulled probability numbers. So we still have a 95% probability of a 25 basis cut at the October 29 meeting. That's only 19 days away. And then a 55% probability of another 25 basis point cut at the December 10 meeting. If both of those happen, that means we'll head into 2026 with a federal funds rate of 3.5% to 3.75%. That's 50 basis points lower than we are right now. And if you want to look out and speculate where we're going to be in a year, currently the odds favor a end of 2026 federal funds rate of 3 to 3.25%. I'm not putting any money on that right now, but that's what the probabilities say. All right, let's move on to stocks. I have 10 stocks for you today. And of course, these are not recommendations, but they're things that have popped up on my screens that I'm kind of keeping an eye on. Bit of an industrial name here. It's Century Aluminum. Ticker symbol is CENX. And we have a market cap of just under $3 billion. Just a couple of notes here on the screen. We're using the Market Surge tool, and you have a summary up here of what the company does in the name. Some data here on the market cap. But then down at the bottom, the upper number is earnings along this line right here by quarter. And there's a sales number as well, including how earnings and sales came in these respective quarters as compared to expectations. If you want to, just pause the video and you can check out those numbers for any of the stocks. I'm not going to go deep into the weeds of them because they're there. It might take you a minute just to sort out which quarter is which, but basically it goes from furthest in the past here on the left side of the screen to the most recent quarter here on the right side of the screen. All right, so back to Century. So they produce aluminum for the transportation, construction, and packaging industries. The company has been working to expand production by around 10%. That follows the Trump administration's tariffs that are aimed at restricting aluminum and other metal imports. As you can see, stock is doing phenomenally well. It was up again this week after Wells Fargo initiated coverage with a $37 price target. We'll move on to Black Sky Technologies. Ticker symbol is BKSY. Around a $1 billion market cap. The company has a constellation of small satellites that capture images of Earth throughout the day. They combine those with AI and analytics. And those solutions are used by government, defense, and commercial customers. As you can see, stock has been acting well. Just received a price target increase from H.C. Wainwright this morning. They boosted their price target from 28 to 42. The stock here trading right around this almost kind of resistance at 29, but just above that, closed at about $30. Yesterday is indicated to open a little bit higher today. So that's Black Sky. We'll move on to OUST. Ticker symbol here is OUST. Market cap just under 1.8 billion. They make high performance LiDAR sensors used for 3D vision in the auto, robotics, industrial automation, and smart infrastructure markets. So obviously used for autonomous systems. No recent news really. Revenue growth going north of 30% per year. And we should have earnings out around November 6th. But this stock continues to pop up on my screens. So I think it is worth doing a little bit more research on it if the autonomous systems market is something that you're interested in. All right, another kind of raw materials play here. This is Ramaco Resources. I may have pronounced that wrong, but it's a U.S. coal producer. Ticker symbol is METC. Of course, there's been some support for coal from the Trump administration. Market cap here about $3 billion. So this company, in addition to producing coal, they're also working to get the first new rare earth mines in the U.S. in the last 70 years up and running. That is located in Wyoming. It is called the Brook Mine Project, and the CEO has been out in the media pretty frequently lately, just trying to get the story out. He's going to be, I think, on Bloomberg later, maybe BBC. So anyway, check out METC. Another coal producer here is Warrior Met Coal. Ticker symbol is HCC. Hasn't performed quite as well as HCC. I'm sorry, as Ramaco lately. But Warrior Met, another, like I said, coal producer, mainly underground mines in Alabama. The stock, again, is benefiting from Trump's plans to fund expansion of coal-powered fuel. Revenue for Warrior Met is expected to shrink by 18% this year, but then surge by 40% next year. UBS just boosted its price target on the stock from 60 to 68 this morning. So there's certainly been a lot more interest in the coal space, and those two names are I think, worth considering. All right, back to financials. So talked a little bit earlier about kind of the sweet spot for financials. And so let's take a look here at Cadence Bank. Ticker symbol here is CADE, market cap of 7.27 billion. Company is active across the South and Texas, of course, full range of solutions like you'd expect: banking, lending, wealth management. Morgan Stanley was out in late September. They reiterated with an overweight rating, and then RBC just boosted its price target this morning from 37 to 43. Again, I'm seeing lots and lots of notes on financials ahead of next week's busy financial reporting season. Citizens Financial Group is another that we have here in New England. Ticker symbol is CFG, about a 22.4 billion market cap. Again, commercial banking, wealth management, mortgage services, yada yada. Everything you'd expect. Bank of America just boosted the price target on CFG from 52 to 65 yesterday, and then early this morning I just saw the note JP Morgan went from 52 to 58.5. A little bit of weakness over the last 3 days for CFG, but based on those price targets and earnings next week on the 15th, probably going to be some action in Citizens Financial Group. All right, we have a couple more here. We have Tempest AI. Ticker symbol is TEM. Market cap of 18 billion. They have an AI and data analytics platform. It's focused on precision medicine, so mainly in cancer treatments, but pretty interesting stuff. Collects, analyzes clinical and molecular data, trying to help doctors make personalized treatment decisions and also to develop new treatments. Really interesting story. Revenue growth is off the charts. It should be up about 80% this year. Lots of details to dig into, of course, with a name like this. Our report should be out, on November 6th. So keep an eye on Tempest AI. All right, one here that there's a little bit of divergence of opinion on. This is Symbotic. SYM is the ticker symbol, 40 billion market cap. Largely due to performance. That market cap has doubled since midsummer. So what do they do? So they have an AI-driven robotic automation system. It's used in warehouses and supply chain centers, really by retailers and wholesalers in their distribution centers, trying to make things more efficient. Revenue should be up about 20% this year. Company should potentially be turning profitable in 2026. Now, Barclays just announced a price target of 38 yesterday, which is quite significantly below the price of 67 that SYM closed at yesterday. But then North Coast initiated with a $65 price target a week ago. We also have UBS, who's negative on it. Really, the debate here centers around whether the company can meet expectations without major new customer wins besides Walmart. So that's kind of the debate. I don't think I would jump into this stock, but I think it's going to be interesting because whenever there is, of course, a significant diversion in opinion, then the stock is likely to move significantly in one way or the other based on earnings. But those aren't until November 24th. So anyway, that's the deal with SYM. Lastly, we have SERV Robotics. Ticker symbol is SERV. I think I've talked about this one before. Market cap is just over $1 billion. So they build and operate AI-powered electric sidewalk delivery robots, really intended to handle that last mile of deliveries for food, small goods. They work with Uber Eats in LA, Miami, Dallas, Chicago, and Atlanta. The stock was up yesterday on news that they are partnering with DoorDash in the LA area. And surprise, surprise, SERV Robotics took the opportunity to put out a secondary offering press release yesterday. So the stock is indicated to be down about 9% today after a 28% rally yesterday. But pretty interesting stuff. I've looked a little bit into the company. I'd say check out their website, look at the robots. We don't have them here in New England, but in those areas where they make sense with the weather and the infrastructure, it's kind of an interesting idea. All right, that's it for this week. Like I said, for some of you, it's a long weekend, but we're going to be back at it on Monday. We hope you enjoy it, whether it's 2 or 3 days for you, and we will be in touch soon. Take care.